Hello, hello, and welcome to the channel. Mardadi. So, today is a very important day for us traders because there is what we call macroeconomics, and this is going to be an educational stream for all of us. There are things which push the market on a larger perspective. Macroeconomics, you don't need to go to school to know about it, okay? Even though it's taught in schools much better. But you don't need that sort of intellect to understand there are certain things that push the markets on a larger scale. You could be asking yourself, okay, what do you mean about it? Let's say today is the 6th of June 2025. It is the first Friday of the month. And something that usually happens on the first Friday of the month is we usually get unemployment data for last month. Okay, I want to make that clear. So it's employment data for last month. Now, we traders, we look at these numbers because we want to make decisions that are going to be based of a basis, a thesis, something that we can say, okay, when you look at employment, for example, employment is directly correlated to how an economy is performing. When you're trading the financial markets, it's important to understand such factors. Now, that's why I'm here. And this is what I've learned from the markets ever since I started trading a while back. News usually engineers and grabs that liquidity because investors are going to make decisions, informed decisions. They have highly sophisticated models that they are using to analyze such kind of information for them to make their decisions. It's currently 2:57 p.m. my local time. At exactly 3:30 my local time, this is, I'm in East Africa, so it's GMT plus 3. In the next 33 minutes or so, we are going to get this information. Now, there are people who usually speculate way earlier in news. Now, news trading is very interesting in the sense that there is what we call lagging news releases and leading news releases. The employment data, the NFP report, yes, you can say it's sort of lagging data, or it takes a bit of time to mature, because if you lose a job today, you're not going to go bankrupt tomorrow. But if people are constantly losing jobs, then that's when people will start taking a note. People will be like, okay, what's happening to the job sector? Because the job sector is a very important piece to the economy. Why? Because that's where money moves essentially. Most of the people substitute their time for money. People working jobs, you're offering your services. So money and employment, they go hand in hand. Generally speaking, if unemployment numbers come out really good, it means an economy is going to do good. If people are losing jobs so much, then people will take eyebrows. No, the economy is not headed in the right direction. And this has an impact in the financial markets. And it's a very important piece to the puzzle. It's a really, really important to understand macroeconomics. Let's look at numbers. Average hourly earnings, we anticipated to have a slight increase of 0.3% from a previous 0.2%. Now, if you look at the graph has been holding up about the 0.3. It usually fluctuates in this region. Now, last month's data and the month before prior to that, this was March and April, we did have the numbers coming out relatively good. compared to what happened last month. Now, last month's data is May's data, okay, whereby we did have a slight dip into the average hourly earnings, whereby we did have the numbers coming out at 0.2%. We are anticipating it to go back to the average. The average is usually 0.3%, the average hourly earnings, meaning how per hour, how much were these people being paid previously compared to the previous months, so to say. The most important data that we'll want to be looking at is the non-farm employment change. Now, when you open the detail, for those who are new, let's say you have no idea of what NFP is. This is the change in the number of employed people during the previous month, excluding the farming and government industry. Okay, so actual greater than forecast is good for currency. It is usually released monthly on the first Friday after each and every month does end. So the next release is going to be June the 3rd. Now, why do traders care? Job creation, as I've mentioned, is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity. Now, if you look at the previous two releases, the numbers have been coming out better than forecast. Whereby, if you look at April, we were anticipating 137,000 jobs. The numbers actually came out at 228,000 jobs, better than forecast. On May, now these numbers are usually revised, okay? Let me take you through this. This is a very important thing to note. If you look at this is the actual number for April, but when you come to May, the previous number is 185,000. So it's a difference from 228,000. Now, this number that you're going to get here is a revision, whereby there were errors in the calculation most of the times. When you look at it last year, there was a total of almost 1 million jobs that were corrected from the initial non-farm payroll release. Okay, so it's very crucial. So this was a difference of about 40 something thousand jobs, which was quite significant in a revision. So we are forecasting 138,000. The forecast is 100. Was 138,000. The numbers actually came out at 177. So currently, the previous number is standing out at 177. But when this data does come out, we are going to get a revision of 177,000. So you're going to have an opportunity to see the difference of how these numbers are usually updated. Okay, so when you look at certain times whereby the revisions, so let's say for example this one was 143,000 for February, but on the next release it was corrected and revised to 125,000 jobs. Now the third data that we'll be looking at, unemployment rate usually stays constant. I don't want to say that I don't look at it so much, but unemployment usually, if you look at the graph, it's usually there, unless there's certain economic turmoil, like something really shakes up the market, like during this period, during COVID, whereby it was something that we have never seen, we have never experienced. Yes, it's happened in the past, but in the modern day age, this is the most recent pandemic that we ever did have. And as you can see, unemployment jumped to almost, let's say 15%, whereby they were forecasting even more jobs to be lost, but the numbers actually started calming down. Now, if you look at the most recent trend, ever since 2022, we have been seeing a slight uptick, down from 3 point something percent. Actually, this was 3.6% on June 2022, whereby the numbers came out at 3.6% unemployment rate, but the numbers usually fluctuate in this region. What would be a concern is if we start going above 5%, of which at the moment, I don't believe there's anything that could trigger such a thing to happen, but you never know. But at the moment, I'll be looking at unemployment numbers to stay at 4.2%. So we'll be waiting for these data to come out. When we go to the charts, I want us to look at the charts. Before we go to the charts, I want us to look at something very important here called the commitment of traders. I just want to brush on it slightly. I want to look at gold because my asset of choice today will be trading gold. I want to go to the short format on the metals. And one interesting thing to note about the commitment of traders. Now, the commitment of traders, for those who don't know, or if you're new to this, This is a government, this is an official government website. As you can see, it's cftc.gov, whereby institutions and other big traders, big participants in the markets are required to file in their positions to the CFTC. Okay. Now, this data is usually delayed in the sense that it's usually updated every Friday. So today by 5 p.m. my local time, this data is going to be updated and we are going to see the changes. Now, the changes in institutions whereby this data is usually uploaded on the 3rd. If you look at these, this was last month. So this will be data for 27th, if I'm not wrong. Yeah, as you can see here. So this is data as of 27th May. So from 20th May to 27th of May, and this is how you interpret this information. So from 20th to 27th, we did see almost, I want to look at the managed money. We did have some offloading of long positions, but massive offloading of short positions. Now, when you look at this data, there's a certain way you look at institutions. Are they selling more? Or are they buying more? When institutions buy, usually prices go to the upper side. But when they start covering their buying positions, let's say offloading long positions, you anticipate a short-term retracement. Now, when you go to the charts, so this is how you apply this information. You'll want to look at it on a higher perspective, let's say on a daily time frame, and look at ever since 20th to 27th. So it will be around this region here from 20th. So it would have been around here to 27, whereby you did see, yes, they did offload some long positions, but they massively offloaded short positions. Now, if you look at this, the number of short positions, 4,000, were heavier than the longs added, and we did see a massive retracement on that said price action. Now, I want to go to the most recent structure that we had, and this was yesterday. Yesterday, I was looking at this price action, whereby I was anticipating a slight, I don't believe I've downloaded. So this was the initial thesis that I had, whereby I was anticipating a retracement of the 50% region for prices to continue pushing to the upper side. Now, I did enter a position, it went slightly into profit, but then hit my stop loss. Now, looking at this is the reason why I download a lot of pictures, but this was the entry position here. So prices gave me like 100 pips, but aggressively moved to the downside. Now, I'm looking at it from the weekly perspective, but because very important note here, the weekly candle has less than 9 hours to go. So I'm asking myself, what are the probabilities that this candlestick will either move to the downside, close to the downside, or closer slightly to the upper side? Now, this is all going to be dependent on the news release that you are going to have in the next 22 minutes or so. By looking at price action, I want to wait first for the numbers to come out. So how I trade news is I wait for the numbers to come out because there's a strategy that I like using so much, and I would want to share with you today this strategy. You will see me execute it live here, okay? Now, looking at this structure, if I pull a Fibonacci from a high to a low, we do see that we are in a period of interest whereby prices has respected the golden retracement region. But I want to see if prices are going to clearly break out to the upper side or have a liquidity grab either on these highs, and this is what I will want to participate in today. So I'm going to mark this high and I'm going to mark this low. Okay. So I'm looking at it on the 1 hour time frame. Yes, it's slightly larger, but I'm going to scale it down. Another point of interest I'm going to be looking at is these are relatively equal lows around this region here. Now, the reason why I have marked those three prices zones is, let's start with this one. So this was the candlestick. This is Asian high essentially of today. As if you look at it, Thursday did close somewhere around this region here. Let me have session breaks. I really like having session breaks to this. Okay, perfect. Now the reason why I have session breaks is to mark the daily lows, daily opening prices, and daily closing prices. Now this zone is now becoming much better in terms of an interest zone. Why? Because this is the opening daily price. This is the closing candle of yesterday. This is the closing candle of yesterday. Then this is the first candle of the trading day. Now, as you can see, prices did make a high on Asian session. Yes, prices came to 33.76 during Asian session today, rallied back down to the closing price of yesterday. Very interesting. For the first time at 10 a.m., which was just after London Open, sorry. And then prices came back down to test the same region at exactly 12 p.m. So technically 2 hours later. Now, there is how I do analyze news is I look for these regions of liquidity whereby prices seems to be attracted to. So this is whereby you apply your fundamental analysis to technical analysis in the sense that you're looking at prices, yes, accumulation, then manipulation, then distribution. Whenever you look at high impact news releases, go to the charts, identify regions whereby prices has made relatively equal lows or equal highs. In this particular case, we do have a triple low if you are going back in time. For other people, they are going to say this is buy side liquidity residing around this region here. Now we want to look at this information. So this is what we are going to mark it out as. I want to see how prices is going to react to this region. Now, what does AMD mean? Let me write it out here for you. So this is one of my strategies that I use. So AMD basically means accumulation, manipulation, then distribution. The markets usually moves in three phases. The markets usually first accumulates. Accumulation is whereby both buyers and sellers are trapped into the same trades, technically opposite sides of the trades, but at a wrong time. Okay? Why a wrong time? This is why. Because for the manipulation aspect to take place, there has to be some sort of a catalyst to push the markets. What could be the catalyst at this particular moment in time? Non-farm payroll, whereby if the data comes out, it's going to be volatile. Now, what does volatility do? Volatility grabs liquidity. After liquidity is grabbed, now the markets will start distributing in the direction that it will continue. Most of the times, it does follow the initial trend that was happening. So in this particular case, we can see the markets have been accumulating. Why? Because the markets rally to the upper side from the high. The markets rally to the downside, formed relatively equal lows to the opening price. Now we are in this region here. We are waiting for the manipulation aspect to come in the next 17 minutes. Then we look for opportunities to make some money. You are going to see me execute it live. If you have any inquiry, put it in the comment section. So if I can go down to the 30 minutes, What a wonderful day. Feels blessed, felt good. Life's amazing. Let's wait and see for opportunities in the marketplace. We do anticipate that we are going to make some profits today because it's a Friday. We say thank you to the week, how you have been wonderful to us. Even though I did hit a stop loss yesterday, it's okay. We left that behind. So we are going to continue. We are going to keep up the fight. We do have 16 minutes or so for NFP non-farm payroll. If I can just look at other assets at the moment. So dollar index is did have a strength, did have a gain. Okay, okay, okay. The dollar index ever since yesterday has rejected 98. And then there's something that's happening with Donald Trump and our guy Elon Musk. Pale, when you go to Twitter, what does this guy have to say? Elon wants to save money. Trump wants to spend whatever it takes to get what he wants. Basically, Elon is white and this guy. Ah, okay. Which team are you on? Ah, Rufus did post about Silver. Yeah, Silver has been very wonderful of late. I don't know why I don't have it on my chart here, but let's look at Silver. Silver has been really good. I stopped trading Silver because it was quite expensive. Well, oh my lord, look at these. Yeah, I think we are at all-time highs, if I'm not wrong. Yes, sir. Yeah, silver has never been to $35 an ounce. Institutions. This is a good thing of learning about how institutions push money. Very interesting. So could we be looking at gold being even slightly gold attacking all-time highs? Because look at this pattern that we are forming currently. The momentum is still to the upside. We don't have to fight it anymore. And I think I need to look for a strategy that looks at long-term buying positions, just scaling into long-term buying positions. And looking at the volatility index, we came back down to the 18 below the 20% region, which is quite normal for us to consider the markets are back to its normal rhythm. Looking at the S&P 500, ever since the recession doubts, ever since the tariffs, ever since the markets went back to Twitter, we have seen the S&P 500 gaining 24% in less than 60 trading days, one of the best comebacks the S&P 500 has ever had in its lifetime. Looking at the Nasdaq, take heavy. We are consolidating. We are still accumulating in this region. Now, remember the AMD, accumulation, manipulation, distribution. So the market right now, it's waiting. And this is the perfect times for you to get opportunities when the market is still uncertain, when the market has not yet started moving is the best time for you to find opportunities. Let's say in this case, NASDAQ, I would still anticipate for it to continue moving further to the upper side, maybe going back to all-time highs. But looking at the daily candlestick of the day, could we just wait on that thought for a moment until the non-farm payroll data comes out in the next 12 minutes or so? But looking at the US 30, we are still in the middle of this region whereby we had the most recent fear of a recession in the marketplace. Now, the markets did close above the 50% region, and we have been gapping actually further upper in price. We did see this gap that was formed during the opening price of Monday the 12th, and prices came back down, retraced that region, and we could be headed further to the upper side. But we want to look for clearer buying opportunities if the opportunities avail themselves to us. Looking at the Russell 2000, Russell Elfumbili, whereby same price action we have been seeing compared to the S&P 500 and the US 30. But one thing to note, we have this trend line to the upper side, and then we do have this region here. So if we do get a breakout to the upper side, if we do get a breakout that closes above, it will be looking for perfect entry opportunities in the marketplace. My entry price just above that region. Stop loss will be dependent on the entry price, and my take profit will be somewhere around that region. If I was to have my stop loss just below these lows that were here, signifying if the market comes back down, and this is what I'll be very careful for, whereby if the market comes, taps me in, I want to be very careful with where I put my stop loss. But looking at it, this is our risk to reward ratio of 1:3, quite healthy in the financial markets to be taken. About the treasuries have been doing so terribly over the past few. People are not that confident about long term because very soon they are going to start lowering the interest rates. They have to. They have to. An interest rate is looming. So if we do see these numbers start to become worrying in the financial markets, we do anticipate the Fed Reserve are going to be prompted to start cutting the interest rates. Now, if they do cut the interest rates, it's going to devalue most of the US treasuries even further. So could we be seeing treasuries in the next few months continuing moving further to the downside? That would be very interesting to note. Looking at oil, we did have support forming around this region, and the market has respected the $58 a barrel threshold. And there's something that's happening, and this is what I really like about price action. Wherever you get candlesticks printing side by side, that's the best opportunities for you to get into the financial markets. Just have a healthy stop loss and let the market play itself out. Looking at Bitcoin, Bitcoin did tap 112,000 recently, but we did have a correction, which is quite normal. Wherever the market makes an all-time high, it usually takes a breather for a further continuation to the upside, possibly. But looking at Bitcoin, Bitcoin is one of the assets that has really changed my perspective as a trader, whereby could this be the next forex trading? Yeah, I've been pondering that so much because when you look at Bitcoin, it's very different compared to what we've been used to, compared to something like gold, something that I've been trading for the past 5 years or so, whereby Bitcoin is decentralized. Its supply and demand is very different. It's slightly different, not very different, but slightly different compared to assets like gold. I trade gold so much. So looking at crypto, especially Bitcoin, I'm asking myself, okay, could this be a better space to go look at? Because the returns speak for themselves. Crypto could be the next big thing, or already it has been. We just need to embrace it. Who knows? Who knows? USD Chinese yuan. Moving over to currencies, ever since we did make a most recent all-time high, the last time prices was at $7 for Chinese yuan was back in 2023, and prior to that, I do believe it was in the 80s. Somewhere around 2008 was the last time. So we did have prices tapping into the 7.3, sorry, and had a massive retracement. And then sometimes you ask yourself, like, well, the markets sometimes are too perfect. If I remember, this price point was just when the tariffs were at their peak, like when the trade wars was at the, people didn't know what Trump was going to say next. And then we have seen the Chinese yuan essentially gaining against the dollar 3% over the last 60 trading days. Interesting. So looking at euro dollar, I'm going to let this slide. British pound dollar. I'm going to let it slide. GJ. I just need one more asset to look at. So I want gold and something else that I'm going to trade. Okay, USD Swiss franc. USDN. I want something that could provide me with okay, USDN. Let's go to a lower time frame. I remember I did hit a stop loss recently. The last trade I took on GJ. Okay, let me remove this thing. This is why it becomes such a nuisance to be looking at. I want to see how price will behave. So when I look at news, I just look at assets that seem to have regions of liquidity. Like you sort of see prices moving. I'm a supply and demand trader. Basically, that's why it began. So I want to look at these regions here. And this is a very interesting region. Because if price does break to the upper side, let me remove this one. If prices do break to the upper side, let's see how many pips this is. Almost 180, quite decent, almost 1.5%. But could that happen in before Friday closing price? I don't believe so. But it could get us in an early entry, which is what I would want. Okay, so we're going to look at USDJPY and we're going to look at gold. Okay, the timer is out. So this is where things get interesting as a trader. Yeah? Let me repeat that. This is where things get interesting because it reaches a point whereby you look at everything. But wherever you are from, you can correct me if I'm wrong. There is something that you will not see in that you will believe in. People have many myths and misconceptions, but there is power in the unseen. Because in the next 2 minutes, NFP is going to come out. We don't know what the numbers are going to be. And as a trader, because you cannot control it, yeah? And this is where things get very psychological. You cannot control it. But if I was in a buy position or a sell position, I'll be emotionally attached because money is on the line. So whenever you're dealing with probabilities, there has to be an element of the simplest word I can use is faith. You need to have faith in something. I have my faith in what I believe in. And it reaches this point whereby the market doesn't hear prayers, but maybe your prayers can be heard. If you know what I mean. So you believe in the process and you let it play out. What account is this? Oh, messed up with the account. Interesting. It just frozen back there a bit. Now, looking at the numbers, so the numbers have come out positive, good, whereby we were looking at 126,000 jobs, and the numbers has actually come out at 139,000 jobs. Quite decent. That's an improvement of around 7,000 jobs or so, 10,000, somewhere around that region, looking at the difference between the two. But average hourly earnings, very interesting to know that we have had a peak in averaging hourly earnings, which is good for the economy, which is good for the economy. Looking at unemployment rate, we are still at 4.2%. As mentioned, we usually fluctuate around that region so much, but the job numbers has come out better. Now, I'm looking at these. This is the position I want to, because I need to rush somewhere. Because this was a good position. This was a good trade. I was looking at these regions of liquidity, anticipating prices coming back down to this region for a continuation to the upper side. But I was looking at my account, something happened. So, but this